Good evening, traders. I hope you guys are having a wonderful weekend because today we're going to give you some education on how the STX Capital trading model works. Now, this video is best for those that want to learn how this can be incorporated into their trading journey. With the STX model, it is helped and designed to give you an idea whether the market is trending up or down, and also gives you an idea what the maximum ranges it can see. Now, these are estimates, and it's here to provide you information on decisions you need to factor in. With the use of option premiums, we can find key inflection points at the beginning of the week and understand where the key breakout ranges are, where the key chop ranges are, and where the bearish breakdown ranges are. So we're going to be going over all of the charts that we created today, show the past versus the present, and then confirm all of this detail here. After this, we're going to be starting our next week's analysis. So if you guys want to ensure that you have a successful week, then joining our mentorship program is what you need to do. So let's get into it and let's discuss what happened last week. So we'll start off with our SPY analysis. With our SPY analysis, which is time-stamped over here, you can see our estimated weekly high was at 574. And if we go over here on our SPY, so we managed to see SPX and SPY go slightly above our estimated weekly high. But you see here that it went through the bullish breakout range, which is our level 3, 577.5. Although it was off on SPX and SPY, you can kind of see that the S&P 500 stopped right at 57.87, which is a few points away from our actual top level at level 3. Level 3 is our absolute reversal zone. So if you guys go in my trading Discord, it explains what each level means, and level 3 is our market peak level that you guys see over here. So we were very close to calling the exact top, only off by 3 to 5 points here. And I'll consider this a very accurate prediction here. You see here that right after when the SPX peaked off here, you can see that the 57.20, which was the level 1 bullish, became a resistance where SPX struggled to get through. And once it really broke down, it closed right around our level 1 bearish inflection point over there. So that's usually very common what you see when the SPX peaks up, that it hits a bearish inflection point just right over there, and you can confirm that that is exactly what we had seen. So in our market strategy channel, this is what it looks like over here. Okay, so SPX 55.85 around where we closed. Now the next chart we want to go over is, of course, QQQ. So QQQ, our estimated weekly high was around 492. Okay, this is time stamped here. So we went to 493. So literally 1.6 points where we expected to, and it closed right near our estimated weekly low at 468, and that is 0.94 above the estimate there. So you can see that the levels are very accurate. We talked about what can move QQQ. You see the numbers all there. So I give this a plus setup. It's not 100% perfect, it's off by a couple of points, but you can see that it stopped near my top level and ended up near my bottom level on QQQ. Going into the NASDAQ right over here, so we also provide NASDAQ levels, and on the NDX we see that the S&P 500 stopped at 20,295 here. Okay, so that was leading into the potential breakout zone. It didn't break through that zone here, but this one here was kind of confirmed that we seen the S&P 500 literally close at 1925, and that was very close. So that was the bottom, 19,241. So these estimates are very helpful for traders to see where the exact bottoms are and so forth. So as you're trading near the end of the week, you can kind of figure out where the market is going. Now, another one here is IWM. So IWM, we call the exact top at 209. So the top was 209.24. So that, of course, is always rounded. You see that right there. We called the exact top, and it ended up closing in our level 2 bearish right over there. So nice to see, this will be a perfect opportunity to add a long short there, and it ended up going a lot lower here, okay? So for NVDA here, seen a lot of weakness. So NVIDIA pretty much hit our first level, 121 approximately. It got through a little bit, it stopped at 122. Level 1 bullish, that's a gatekeeping level. So usually this level is one where if you think if the stock, pretty much has been a weak trending stock, meaning we know semiconductors have been very weak. So whenever it hits level 1 bullish, that's a great opportunity to short if you think it's gonna move back down. So approximately level 1 bullish was right there, ended up closing near our estimated weekly high here. Estimated weekly low, which is around 110, and its bottom was at around 109 for this week. So we're off by 1 point here. Tesla, we called the exact top at our level 3 here, 292. Okay, so far, if you guys been paying attention here, we've been calling very accurately the top on SPX, QQQ, SPY, and IWM, and all these levels. And you can see that although it's off by a couple of points, no one can be accurate. We round these numbers, but you can see right over here, Tesla 292.15, literally the exact pinpoint accuracy right there, timestamped. You can see all these levels are not by coincidence, it's by through our model, and you can see we call the top over there. Okay, we played Tesla this week here, and we started to short it once we seen a pullback right over here, and we knew that 263 is where we need to get out of our shorts on Friday, and that's exactly what we did here. The next one is Meta. So Meta stopped at level 2 right over here. So this was a tough inflection point. The only thing here that I would say we got wrong was that level 2 confirms trend, right? So in theory, this should have stayed up, okay? Because it only usually stops when it hits level 3. So we may have this could have been level 1 bullish. So we have to look at that very carefully here. But it did close near level 1 right there. And once the market got weak, that's when it started to really dive. Usually the trend is confirmed to the upside when it hits level 2 unless news comes, but the overall market was weak here. So interesting to see that. Still rejected off our inflection points, and still immense downside on the stock once the market started to look weak. Now ARM here, so ARM also didn't hit our level 2 bullish here, but pretty much stopped near our estimated weekly low at around 108. So knowing where the tops and bottoms are key for you to understanding which strikes to pick. So if, let's just say, if it's Thursday and you see ARM is at 113 and you want to short it, you know that you don't want to get any strike that's beyond 108. Okay, so if, let's just say, the premiums for the 108 are $1, then you want to understand that taking this play at $1 might not be feasible to do because it's at 108. That implies that you have to see ARM pretty much go to around 106, 107 in order for you to break even. Now PLTR here, so PLTR stopped at around level 2 here as well. Once the market got weak, it started to pretty much reject. You can see a lot of resistance there at the 96 mark, so interesting to kind of see that as well. Broadcom here, so Broadcom went below all our levels because it was very weak, but you see here that it broke below the 175. So not all these levels are perfect, but I'll probably say we're 80% spot on with that as well. So going to SMCI here, SMCI didn't finish its fully breakdown. It was choppy in the neutral range between 40 and 44. You can see that there's a little bit of resistance right at this level 1 bearish, resistance again at this level 2, broke below this, and it started to really break down under our 36 bearish breakdown zone. So interesting to see that. So crowd, we called the exact top. It stopped right at a 392. That was our estimated weekly high, as you guys can see right over here. And that was on a Tuesday. And since then, it pretty much closed at the 200-day moving average, right around our level 1 bearish. So interesting to see that. Going into MSTR. So MSTR, very interesting. It also peaked off at our level 3 bearish, which is, sorry, level 3 bullish, which is our reversal zone and usually our top level. So we called the top on this to approximately 340, and it ended up closing around our level 1 bearish zone right there. So interesting to see that. Coin was another stock that stopped right around our level 3 at 203. So taking shots at these inflection points is something that you can always do when you see those key levels here. Okay, so stopped exactly at our level 2 bearish once it pretty much peaked out, because level 3 is usually our top zone here. Apple was pretty much our top zone, so nothing really relevant here in terms of the levels. We're just watching that. Netflix. So we see Netflix hit our level 2, stopped exactly right there at 997, and then pretty much ended up near our estimated weekly low. So interesting to kind of see that. Here's the levels for confirmation. And as we go into our final stock is Hood. Okay, so Hood stopped right at around close to 50 bucks. Didn't get to our estimated weekly high, but dropped right over there. And that's our final stock here. So we're going to be pumping out over 30 charts for next week, and we're going to have it ready to go. So with next week, there's a lot of important things that are happening. Powell is speaking, but more importantly, the tariffs are going to be initiated on April 2nd, which is the Wednesday. This is going to be a crazy market with those tariffs coming out, because does the market start to sell into the number, fearing that the tariffs will cause uncertainty, or will the market stabilize once the tariff news is out of the way? So we believe that the Dow will likely be impacted, and we're going to see weakness in the crypto leading into the tariff news. We know that the auto tariffs is going to be here to stay, but we also believe that Dow related stocks are going to see the biggest impact. This includes Costco, Apple, and many of those key stocks that are in the face of the Dow. The techs have already been impacted by the majority of these tariffs issues, and we're starting to see yields really move higher in the direction. So in that case, I think Tesla may essentially stabilize because of the fact that Trump is not intending to add tariff on auto parts, and Tesla is 100% made in the US. So I believe, with that being said, the Dow is probably going to see the major weakness for this week here, and we'll keep an eye on other sectors as well. And so far we are swinging Costco puts into next week and MSTR puts. So we believe that the market is going to be bearish on that aspect, and we'll see if this works out. So if you guys want to join our mentorship program and get access to these levels before the start of the week, check the description below. The link is there, and we'll be giving you guys access to all of this key information. You see firsthand, timestamp, and these numbers never change, that we call the top and the bottom on market indexes and many different key stocks. So having this level of information is going to be vital for your success, and knowing what strike to pick, knowing where the bearish breakdown ranges, knowing where the top is what you need to do. I've been very transparent multiple weeks, time and time again, showing that this model works, and I hope you guys can see it for yourself. So let's make money together. Join the StockX mentorship program. We'll see you guys on the inside, and like always, let's get that money.